envision finding your dream home, only see it slip away due to skyrocketing mortgage rates. This financial hurdle reshapes housing dreams for many young Canadian professionals, with the future of the housing market on shaky grounds. What are you to do? What information is correct? What do you believe? Let's explore how these rising tides impact the housing market and what strategies can help navigate this challenging landscape. As a realtor here in the lower mainland of BC, we see this impact heavily here on a day-to-day basis. So before we jump into the video, don't forget to subscribe for future updates, hit the notification bell, and hit that like button to help us with the algorithm and push our content out to other Canadians like yourself. We understand how difficult it can be to find a good realtor, and we have a large network across Canada. So if you're looking for some help, reach out to us and we can set you up with someone who will be the right fit for you. With that out of the way, let's get into the video. Canada's housing market is deeply rooted in the nation's identity and economic fabric. Homeownership represents stability, security, and personal legacy within the vast, picturesque country. In recent years, mortgage rates have fluctuated significantly, surging to levels unseen in over a decade. This shift is monumental compared to historical periods of relatively low interest rates that facilitated easier access to home loans for first-time buyers and young professionals eager to establish roots. The impact on these demographics is profound. Young Canadians entering the workforce or advancing in their careers now face an unforeseen barrier. Accessing affordable mortgages has become more challenging than ever before. It's not just about higher monthly payments, increased down payment requirements, and stricter lending criteria compound the issue further. For individuals like yourself watching this video, eager to make informed decisions about your real estate future, understanding this situation is critical. Rising mortgage rates don't just represent ticking numbers, they symbolize deferred dreams and the need for significant financial strategy adjustments. However daunting it may seem, there's a silver lining. Early awareness allows for strategic planning and alternative approaches towards achieving home ownership. Recognizing the landscape helps navigate it more effectively, armed with knowledge, adaptability, and resilience amidst changing tides. Despite shifts in mortgage rates altering the terrain of Canadian real estate, opportunities still abound for those prepared to explore them thoroughly. Keep listening as we dive deeper into understanding these trends better and devising strategies to turn potential barriers into stepping stones toward your dream home. Rising mortgage rates have become a formidable barrier for many aspiring homeowners, especially young professionals and first-time buyers. This surge isn't just a minor bump, it's morphing into a significant obstacle requiring strategic thinking and tough decisions. The problem extends beyond mere percentage increases, catalyzing a domino effect across the housing market and broader economy. Higher mortgage payments stretch household budgets, making it difficult to save for down payments or afford monthly costs. Consequently, potential buyers are either pushed out of the market or forced to consider properties below their initial expectations. Furthermore, this escalation directly impacts housing affordability, a central pillar for economic stability and growth. As borrowing becomes more expensive, demand may decrease, cooling overheated markets but also risking stagnant property values over time. This scenario is dual-edged. Existing homeowners might find less buyers interested if selling, while prospective buyers struggle with accessibility from both ends. Personal stories abound, tales of dreams deferred as financial plans require recalibrating under these financial strains. These aren't abstract statistics, but real-life echoes of frustration where aspirations meet harsh economic realities head-on. Peering behind these immediate effects reveals subtler implications. Shifts in homeowner demographics and potential long-term changes in city landscapes as neighborhoods previously accessible begin catering exclusively to wealthier segments. Concerns arise about future generations' capacity to own homes with certain urban centers, an unsettling prospect when considering home ownership's traditional role in achieving personal and financial milestones in Canada. As we dissect these problems further, remember the landscape is challenging but not insurmountable. The evolving dynamics present urgent call for innovative solutions and adaptive strategies aimed at overcoming barriers imposed by today's soaring mortgage rates. The implications of rising mortgage rates stretch far beyond immediate financial constraints, setting off ripples that could reshape the future of home ownership and wealth building in Canada. This wave doesn't just wash over today's buyers, but extends its reach into the fabric of our communities and the aspirations of future generations. One significant long-term impact is on home ownership as a cornerstone of individual wealth building. Traditionally, owning a home was not just about having a place to live, it was also a key investment towards financial security. With higher interest rates, this pathway narrows, potentially altering how young Canadians view and attain financial stability. Moreover, the changing dynamics induced by rising rates are likely to transform the landscape of Canadian neighborhoods. Areas once seen as affordable gateways for first-time buyers may undergo demographic shifts towards higher income residents only, further exacerbating issues like gentrification and community displacement. The socio-economic diversity essential for vibrant neighborhoods might be at a risk if access to home ownership continues to constrain. This situation casts shadows over future generations to altering their vision of what's achievable or desirable when it comes to owning property. As aspirations adjust under economic pressures, we might witness a shift in lifestyle choices, with more emphasis on renting or seeking alternative living arrangements outside traditional urban centers and suburban developments. These changes signal potential trajectories requiring attention from policymakers, industry stakeholders, and individuals navigating these currents themselves into Canada's fabric of success and stability. The challenges presented by current mortgage rates questions how the narrative will evolve moving forward. Navigating this landscape requires more than short-term fixes. It demands deep reflections on our collective values around housing and innovative thinking about making ownership accessible and sustainable for everyone aiming to call Canada home. In the face of high mortgage rates, it may seem like the currents are against us. Yet, by employing smart strategies and leveraging available resources, we can turn the tide in favor of aspiring homeowners. It's about making informed decisions that align with your long-term financial goals and taking advantage of support systems designed to buoy you through these choppy waters. Smart financing begins with exploring alternative lending options beyond traditional banks. Credit unions or private lenders often offer competitive rates that could make a significant difference over time. Additionally, consider shorter loan terms or adjustable rate mortgages, which might initially provide lower interest rates compared to fixed rate mortgages, though they come with considerations regarding the future rate adjustments. Investing in your future underscores the importance of rigorous financial planning and education. Understanding how mortgage rates affect your overall financial landscape allows for proactive rather than reactive decision making. Tools such as online calculators or consultants with financial advisors can map out various scenarios under different rate conditions, empowering you with clarity on what's feasible within your budget. Furthermore, community and government support programs act as a safety net for first-time buyers and young professionals entering the housing market amidst rising interest rates. Initiatives like Canada's First-Time Homebuyer Incentive offer shared equity loans to reduce monthly payments without increasing down payment requirements, a boon for those struggling to cross the initial threshold into homeownership. As well, here in BC, we have different first-time homebuyer programs that help reduce with the property transfer tax bills for those who are looking to buy their first home and fall within the appropriate criteria. The provincial government has recently changed the criteria for first-time buyers and those looking to purchase new construction properties for their principal residence. By weaving together these approaches, seeking alternative financing options, bolstering personal finance knowledge, and tapping into governmental support where applicable, you fortify your position against current market challenges. While navigating this environment requires adaptability and sometimes patience, remember, Opportunities for homeownership persist even in less than ideal circumstances. I hope this discussion not only informs you, but also inspires resilience among Canadian homebuyers facing today's mortgage rate reality. Remember, every challenge presents an opportunity. It's all about finding ways to harness them towards achieving our dreams.